Well, hey there, everyone. Happy Tuesday. Okay, let's get everything set up here. I feel like this week I'm really off because I'm like quasi on vacation. So that means that like all the stuff I normally do every week, I don't know. I'm out of my routine. So I just don't know. So all right. Hey everybody, thanks for being here. For those who are here live, so great to see you. Adrielle, am I saying that right? Hopefully I'm saying that right. Welcome. If you're here live, definitely let us know in the comments. And we're gonna go ahead and dive in to our Tip Tuesday today. I had to remember what day it was, what we were doing today. So let me bring this up here. I am really excited for this one because this is the end of the year is one of my favorite times. I not because I'm excited for the year to end, but just because I love this time of kind of taking stock of what's happened and just getting excited, gearing up for the new year. I'm going to put these on so that my mic's a little closer. Hold on. Just gearing up for the new year. I get really excited. I love the end of the year. And so today we're going to talk all about how to do a year-end business financial review. Now, I know this may not sound like the sexiest thing you can do at the end of the year, and it's not. I'm going to be honest with you, it's not. At least in the sense of like champagne and parties and all that. Although we can't really go to parties this year, can we? But this is so critically important for your business. And the reason I believe that, or the reason I know that that is true, is because the numbers in our business truly are a gold mine of information. They tell us so much. They tell us what's working, what's not working, what needs to be focused on, what needs to be tweaked, where people are coming from, what people are spending their money on, where our time is spent, where our value is coming from. The numbers in our business really do give us a significant amount of information. And that is a gold mine when you're trying to figure out how to build your business successfully. So doing a year-end business financial review is really important then because it's a great time to look at what's happened that year, regardless of how the year has gone to you, regardless of how you feel about the year. It's a great opportunity to look at what's happened that year and make those adjustments going into that next year. I think it's just a natural time of change. And so it's really great to be able to do this type of review. So I've got some slides. We're going to jump into these. But as always, if you all have questions, drop them in the comments. I'm here. I want to answer them. And so that I know who you are, right above my head should be a little thing that says, please click this link to use StreamYard or something like that. That way I can see who you are. Otherwise, I don't know who you are. I just see Facebook user. So, which is fine. If you want to be anonymous to me right now, that's okay. I can live with that. But I'd love to know who is watching us live here. So, all right, let me go ahead. Let's also take off the thing that says we'll be live here soon because that's just not true. I told y'all, tech is not my thing today. All right, hold on. You're killing me. Hold on. Y'all, I downloaded the new Mac operating system last night, and now it's like, we need you to do all of these things so that we can share your screen. And I don't know how to do this. So, all right, hold on. I guess we should have tested this. We didn't think to test this. Hold on. Allow the apps. Yes. Oh, no, I don't want to record my screen. Oh, my goodness, y'all, this is just a hot mess. If we can't share the screen, I've got a backup plan. Don't worry. Oh, here we go. I can do it right here. There we go. Perfect. Okay. How to do a year-end business financial review. Let's go. So first thing we're going to do is get the stuff that we actually need for our review. There are generally 3 things I like to bring to a year-end financial review. Number 1 is my income statement. Now, depending on the accounting system you're on or how you track your money, this could be in a variety of formats, right? If you've got an accounting system, this will be called an income statement or a profit and loss statement. If you're tracking your numbers in Excel, then just grab your Excel workbook, or don't grab it, but you know what I mean. Have your Excel workbook. But you need to know what your revenues were, what your expenses were, and what your profits were. The second thing you're going to want is some kind of report on your assets and liabilities. Now, most of us are on the cash basis of accounting, which basically means that we're not keeping a balance sheet in the sense that we're not keeping a record of money we owe or money that's owed to us. So for most of us, this is going to be your bank account statement, or current balance. It's going to be any credit card statements tied to your business. And if you happen to have other assets in your business, like if you've got a business savings account or you've actually got a business investment account, then it would be the statement for that or statements for that for the year. And then similarly for liabilities, you would want to just bring a list if you're enrolled in a group coaching program and you're going to owe money for that, or if you're on any payment plans, just sort of having that information. Again, it could be in an Excel spreadsheet. It could just be a list. It could be the physical statements, whatever it is, just having that information. And then the last thing I want you to have is your budget to actual. Now, if you're like, holy shit, what's a budget to actual? Bear with me, take a deep breath. So I highly recommend that everyone makes a budget in their business. And if you don't know how to do that, I offer resources for that, and I'm going to keep offering resources. DM me, I'll hook you up. We'll figure it out. So if you have created a budget, then your budget to actual is where you actually go in and you, next to your budgeted line, you show your actual numbers. Now, I recommend doing this on a monthly basis. In fact, my budget template, which is included in my Biz Money bundle, has this all set up for you. So you don't have to create this sheet. And if you're curious about the bundle, we're going to do a quick promo here. Curious about the bundle, you can go to megkwheeler.com/bundle and grab that today. But that, you want to have some kind of a budget tracker where you are making a budget for your business, and where you're also tracking the actual numbers that you do in your business, so that you can go back and say, okay, I budgeted to bring in $10,000 and I brought in 12, or I budgeted to spend $1,500 on Facebook ads and I spent $1,800. You want to be able to track that stuff. So if you've been doing that, I want you to bring your budget to actual. If you haven't, that's okay. Breathe. You have all that information in your other documents that I've told you to bring. It's just going to take a little bit more digging to kind of figure it out, but that's okay. And make a mental note. Let's get a budget set up for you for next year. All right, so now that we've got what we need, what do we want to look for when we're actually looking at this stuff? So let's start with that income statement or profit and loss statement or revenues and expenses and profits in your Excel sheet, whatever it is that you have. So the first thing I like to look for is the very obvious thing. Was the business profitable? And by the way, if it wasn't this year, that's okay. Now, remember, profitable means revenues minus expenses equals profit. So profitable meaning you had a positive profit number. You weren't in a loss position. Now, when I say it's okay if you weren't profitable, the reason I say that is because a lot of businesses take a year or two to be profitable. Now, in the online business space, because our costs are so much lower, the ideal is that we're profitable pretty early on, that it doesn't take us that long, but your business may be different. And so I don't want you to feel any sense of shame or judgment if you look at that and maybe you're avoiding your numbers because you know that you weren't profitable this year, especially this year, right, y'all? I mean, 2020 was a tough year. So if that was you, that's okay. We're going to work from there. This is just the baseline. So were you profitable or were you not profitable? And if I'm in a situation where I'm not profitable, I like to ask myself why. Well, what happens that I wasn't profitable? Maybe it's because I just started out and I, spent all the money on those startup costs, but I haven't really got the revenue coming in. Or maybe it's because it was 2020 and this was a really tough year and your kids were home and you couldn't work for 6 months of the year. And so you still had all the expenses that you couldn't get rid of, but you weren't bringing in revenues. Again, this isn't about judgment or shame. It's just about understanding, because a lot of times the reasons why things aren't good in our numbers are actually things that are going to change. We're not always going to be in this pandemic. Your kids aren't always going to be stuck at home, even though I know it feels like it. You're not always going to be in that initial phase of building your business. So if it's one of those things, just understanding that that's the reason for being in that position is a really good point to move forward. Now, if none of those is the case and you're like, honestly, I don't know why I'm not profitable, or maybe your profits were just really low. I don't know why I don't really have that much profits. I feel like I'm working all the time and I'm struggling to get sales and this and that. And it doesn't feel like that's something that's going to go away. That's okay. The next things we're going to look at are going to help with that analysis. So the next thing I like for you to look at is your different revenue streams. Now, when I say revenue streams, what I mean is if you offer done-for-you services, that would be one revenue stream. And actually, that could break into many, because for me, for example, I do done-for-you tax prep, but I also do virtual CFO services. So when I'm looking at my numbers, I look at each revenue stream separately because I want to know how my tax prep is doing versus how my CFO services are doing. It could also be if you've got a course, that would be its own revenue stream. If you've got a membership, that would be its own. If you've got an ebook, that would be its own, and so on and so on. So you want to look at all those different revenue streams. Now, a lot of people will say to me, I don't actually track all those different revenue streams. I just have one revenue account in my accounting system. What do I do? Great question. So my first answer is moving forward, let's try to track those. In my accounting system, all those transactions come in through my bank and they generally all get lumped into like a general revenues category, right? Well, when I do my money meetings, or usually I do this once a month if I'm being honest, I'll go in there. It takes me about 10 minutes. I do a quick run through and I say, okay, that was course income, that was membership income, that was I do voiceover work. That was tax prep. That was this, that was that. And I categorize it. Now, it's not always perfect. I do a lot through Kajabi. So sometimes I'll have to dig in and say, okay, was that Stripe payment for this or for that? And you can decide how tedious, like how deep down you want to go on that. But I like really knowing where my revenues come from, because at the end of the month and at the end of the year, I want to be able to say, okay, this is what I made for my courses. This is what I made from my membership. This is what I made from tax prep, because that helps me understand where my greatest bang for my buck is. If I look at my numbers and I realize, I'm making or let's do it this way. If I look at my numbers and I say, wow, 70% of my revenues are coming from my course, then assuming that those revenues or those sales are profitable, which I'll talk about in a second, then I want to focus on my course, because wow, people really want that course. That's where my money's coming from. So that's where I want to focus. Now, that second part of it, well, is it profitable, is looking at those revenue streams. So not only saying which ones generated the most revenues, but which ones were the most profitable. Because what happens too often, I find, is that people will say, oh, well, I get the most revenues from my coaching program. But when we actually dig down in the numbers, it turns out coaching isn't that profitable. This isn't a general rule. I'm not saying you can't coach and be profitable, just giving an example. We'll say coaching isn't that profitable for them because they're putting so much time into it that their bang for their buck just isn't that great. Versus the example I always give of this, y'all may have heard this one before, is I had a client a few years ago who came to me and she said, I'm burned out. I'm making 6 figures, but I feel like I'm not making any money. And she sold a coaching program and she sold a course. And as it turns out, her coaching program, which is what she thought was her big money maker, wasn't very profitable at all, because she was putting so much time into each client that, yeah, they were paying her like, I think $2,500 a month, whatever it was. But she was devoting so much of her time that she was feeling ragged and burnt out at the end of the month. Versus her course, which was DIY, like she wasn't that involved in it. She made it. And I think she did like once a month, she showed up and did Q&A or something. But that was it. It was already created. So every time she sold her course for $500, no, it wasn't the $2,500 of her coaching package, but she didn't have to do very much to get that to earn that $500, right? So it's not just looking at which revenue streams have the most revenues, but also which ones have the most profits. Now, the next question I usually get is, hold on, I'm not tracking my expenses by revenue stream either. And my answer to that is, that's okay. I go over this a lot more. Where did we do this recently? We do this in my membership, Badass Moneymakers. We did a great workshop on this where we really broke down how to allocate your expenses to your revenue streams. And while I'm not promoting my membership right now, if anyone does want to join, you can do that by going to megkwheeler.com/action. There's a workshop in there. I think it was November where we did this. But basically what I recommend, I'm not saying you have to have in your accounting system, you have to like group things out, because the reality is most of our expenses go towards a few different revenue streams. Like for example, Kajabi, which is my online course and membership platform. It costs like $150 a month, I think is what I pay. Well, that supports both my course and my membership. So what I do when I'm doing kind of my revenue stream analysis is I just divide that cost between my courses and my memberships to get a sense for what those expenses are. So you don't have to get like super nitpicky on this stuff, but it's good to look and get a sense for where am I generating the most bang for my buck, where my revenues are high and my expenses are low. And when I say expenses, by the way, please include the value of your time, because for many of you who work in service businesses or, coaching businesses or whatnot, your time is the biggest expense that you're putting into delivering for each sale. So make sure you're factoring that in as well. Now, I also like to look at which revenue streams require the most expenses. And what I mean by that is like physically, in order to satisfy the sale, I've got to spend the most amount of money. Now, this revenue stream may actually be your most profitable as well. I'm not suggesting that you cut the revenue stream that has the most expenses. But coming out of a year like 2020, where everything changed, it's really important to understand where your baggage is. So if we went into another year where you were stuck home with the kids for 6 months and you couldn't work, it's important to understand which of your revenue streams costs you the most to deliver. And sometimes that cost is in time, and sometimes it's in other materials. So for example, for my virtual CFO services, we use a lot of tools. So those cost me money. So if I wasn't in a position, and it also costs me a lot of time too. So even though they're profitable for me, they are one of my higher expense revenue streams, because I need to have the financial planning tool and the cash flow tool and this tool and that tool, et cetera, et cetera. My tax return prep service is another great example. I've got to have the tax software. I've got to pay for the client portal. I have to keep my CPA license up to date. I've got to pay for continuing education. Lots of expenses go into that. So if I were to go into a period of time where I felt like I needed to lower my risk and cut down on my required expenses, I might look at my tax prep services or my CFO services and say, maybe I'm going to scale back on those or get rid of them. Because even if they're profitable, in a year like this year where we weren't all able to show up in our businesses, sometimes you need to cut those things, right? I have a client who works in retail, owns her own shop. And one of the things she and I talked about quite a bit is in a year like 2020, you've got a lot of baggage when you're a retail business owner, because you've got rent or mortgage, depending on your situation, for your shop, and you've got lots of inventory. That's hard to just get rid of if shit hits the fan and you need to scale back on expenses. So understanding those areas in your business that have more baggage can set you up for when we go into a period like 2020, or really anything. You get sick, or something happens. You've got a big business expense that was unexpected, and so you need to divert cash. Whatever it is, what those areas are that really kind of have that extra baggage for you. Okay, so Adriel's got a great question here. I want to get to this before I move on. If the majority of my costs have to do with ongoing education, which does not have an equivalent revenue stream, where would I put that? Just divide among all revenue streams. It's a great question, and I wish we could go into the details today, because I know this can be tough and overwhelming. But basically, that would be a cost that we put into a bucket called overhead, or operating costs is what people sometimes call them. And you're absolutely right. Those essentially get divided between all the different revenue streams. And the way I look at this is, I'll take my revenue streams. For simplicity, let's just say we have two, a course and a membership. And let's say the course brought in $60,000 in revenues, and the membership brought in $40,000 in revenues for the last year, let's just say. Or conversely, you can look at what you expect them to bring in for the next year. So 60-40, right? 60% from courses, 40% from memberships. So let's just say I spend $10,000 this year on overhead, education, office supplies, et cetera, et cetera. 60% of that $10,000, $6,000, I'm going to allocate towards my courses. 40%, $4,000, I'm going to allocate towards my memberships. And that's how I deal with those overhead expenses. Cool? All right. Hopefully that made sense. Let me know. Perfect. Okay, perfect. It says that's exactly pretty much where I already put it. Wasn't sure how to apply that to revenue streams. That's exactly right. Though things like that go into that overhead bucket. It's those other expenses like Kajabi. I said for me, Kajabi is directly related to delivering my course and my membership. So that one I'm able to, that doesn't go into overhead for me. I'm able to allocate that directly to my course and my membership. Cool. Okay, so some other questions I ask about my income statement or my profit and loss statement is, did my revenues vary throughout the year? And this, I'm laughing because it's like 2020, right? Of course, they probably varied for pretty much everybody throughout this year. But this is important for me to know in any year, because I want to know, do I have high periods? Do I have low periods? Was I able to consistently grow my revenues, or was it really sort of up and down? And this is important for a couple of reasons. Number one, if it kind of goes up and down, or if it's consistent, it's going to be helpful for when you build your budget for next year. But number two, if it is inconsistent, that may be something you want to work on for next year. That may be a goal for next year to say, I'd really like to get my income more consistent. back to my retail client that I was talking about, one of the things we talked about with her, not surprising, she's got busy periods, right? The holidays, for example, Mother's Day. Well, we talked about strategies she could implement so that she could have more consistent sales throughout the year instead of having such huge ups and downs. Because the problem with ups and downs, and this is also the reason I have an issue with online folks who do big live launches throughout the year. The problem with ups and downs is then you're relying so much on those big highs to fuel those low lows, right? You're doing that big launch, you're hoping you hit whatever that number is so that you can survive for the next 6 months. I prefer to have more consistent income. Now, the consistent income doesn't have to come from just one revenue stream. So, for example, tax prep. I'm not going to be selling my tax prep services in July. Like, nobody's going to be interested in them in July. So the majority of my tax prep revenues are going to come between now and April when I'm signing people up for my packages, right? But that doesn't mean that my income, it has to be inconsistent. The rest of the year, I'm going to focus more on my course and my membership because those are products that I know people will be interested in during those times of the year. So it's looking at where your revenues came in and how can you focus on smoothing those out, because ultimately the smoother they are, the less risk you have. Because what if you got sick? What if someone in your family got sick? What if you needed a mental health break from your business? What if you had a huge opportunity that came up that was going to take you away for a couple of months? Any of these things that would potentially knock that revenue plan off, on its face. That's what makes those sort of high highs and low lows super risky. The more consistent your revenue is, the less affected it is by unexpected situations like that. Cool? All right, perfect. So let's go to the next slide. If I can figure out how to move it. Hold on. Okay, now we're talking about our assets. So again, these are things you have, the money in your bank account, the money in your savings account. If any clients owe you money, right? Those are technically assets because you're going to get money in the future. So this is where we really want to look at kind of the health of our business. Like, how much do we have? And I always like to ask the question, kind of a scary question, but if I didn't make any money starting tomorrow, how long would I have? What's my runway? When would I be in sort of oh shit territory? So looking at how much cash do you currently have in the bank? I also like to look at what was my lowest cash balance during the year. If I look back and I'm constantly seeing that my bank account was getting to like $100, $200, super low, then that's an indicator that, again, think about the highs and lows, right? We want to try to smooth things out more. That's an indicator that I'm going to have some periods where things get a little dodgy. And what can I do to change those periods? Maybe it's keeping more cash in my bank account so that I've got a bit more of a buffer. Maybe it's lowering my expenses to try to keep more of my cash. Maybe it's working on strategies to get people to pay me differently. So for example, using payment plans so that I've consistently got money coming in. Lots of different strategies, but I want to understand that because cash flow at the end of the day is really one of the most important indicators of the health of your business. Now, I also like to look at, do I have an emergency fund? Do I have a tax savings account? And what are the balances there? Am I constantly running out of money in those, or are they pretty flush? Am I doing okay? And again, I'm using all of this information. There's no right or wrong answer here. All of this information is simply helping me make a plan for next year that's going to help me hit my goals. So if I look and I say, I didn't really save in my emergency savings account this year, or yeah, I put money in my tax savings account, but every time I paid my quarterly payments, I wiped out the account and then some, then I know that maybe a goal for next year is going to be to save a little bit more or to put more aside for taxes. And so this data, this information is going to help me set those goals and make that plan. Again, I think about cash flow. This is a big one that comes up for a lot of folks. And the example I've given before is, so this is actually my personal life, not my business, but the majority of my household bills are due between the 1st and the 15th of the month. And, my husband gets paid twice a month and I try to, or not try, but I do pay myself twice a month. I was going to say I try because at the beginning of this year it was inconsistent, but now we're better. But so we don't we have enough money every month to pay our bills, but the cash flow can get a little dodgy if we don't watch it because so many of our bills are due that first 15 days of the month. It can be the same thing with the revenues in your business. Do you have all clients that pay at the end of the month? Just because maybe that's when they got brought into your program. And so are all your revenues coming at the end of the month, not the beginning, and your bills are due at the beginning? This is all important information to have so that you can make adjustments for next year so that you're not constantly sitting there like praying the account doesn't go negative or transferring money so that you're not screwed, right? So again, it's all about getting this data so that you can set up a better plan for next year. Okay, now we're going to move into liabilities. Now, these are things you owe, right? Do you have debt? And if so, how much debt do you have? And do you have a plan to pay it off? I'm not against debt, but I want to make sure that you've got a good plan to actually get rid of it, right? So put it in writing. If you've got credit card debt, how much do you have and how much can you put towards it every month? And how long will that take you to pay it off? Is your debt increasing or decreasing? So if your debt, is constantly increasing, then perhaps we need to look at your budget and say, are you spending more than you should be? Because if your debt is constantly increasing, now if it's increasing over a short period of time, that might be expected if it's a new business. But if year over year or even over the course of a year, the debt keeps going up, that can be a red flag. And so again, this isn't about shame or judgment. It's about assessing the situation and saying, my debt keeps increasing. How can I make a plan to stop that? The first thing we always want to do when anyone's in financial crisis is stabilize. Okay, I use this word a lot when I'm working with clients who are really under pressure. First, we need to stabilize. Don't stress about trying to pay it off. Don't stress about it. Just worry about stabilizing. We're not adding any more and being able to make the payments on the debt that you have. Let's stabilize. Then once we get there, then we can create a plan that actually pays off that debt over time. But that's something you should look at. And I know nobody wants to look at debt. I know nobody wants to talk about debt. Oh, right? But you've got to do it now, because if you don't do it and it continues to snowball, then what's going to happen is at the end of next year, you're going to have double the debt. You're going to be in an even worse situation to be able to pay it off. And it's going to continue to harm the financial health and security of your business. So let's look at it now. What is the interest rate on your debt? So I said I'm not against debt. I actually don't. A couple of things. Number one, if you're buying things and you can buy them on a 0% plan, I'm not opposed to that, because hey, that's getting the option to pay for something over time at no cost to you. But if you do that, make sure you have a plan. You're going to hear this word a lot from me. Make sure you have a plan to pay that off over the period of time that they give you that it's 0% and it's in your budget. And make sure that expense gets treated as a priority expense so that you don't end up in a situation where you end up incurring interest. I'm also not opposed to debt that has interest if the interest rate you get is lower than what you could otherwise use that money for, right? So, this is where you'll see like the car loans at, 1% or 2% or whatever. That's a really good interest rate for something like that. So I'm not opposed to that kind of stuff, but evaluate what the interest rate is. Can you do better? Can you, take out a different, refinance? Can you transfer it to a different card? Is there a way that you can get that interest rate down? Honestly, can you even just call your company and say, can you lower this? They probably won't, but it's worth a try if your interest rate is pretty high. Okay, so now let's get to the budget to actual. This is truly the meat of this process, because this is where we look at what our plan was and what actually happened. Now, if you didn't do a budget, that's okay. Remember, we talked about that at the beginning. There's no shame here. I want you to prioritize doing a budget for next year. But if you didn't do a budget for this year, that's okay. What you're going to look at here instead is just the actual numbers, okay? So the first thing I like to look at is, where did we actually hit our budgeted goals? And what were our budgeted goals? Did you have a revenue goal? Did you have a profit goal? Did you have a non-financial goal, like people on your email list or number of clients or whatever it may be? What were those goals and did you hit them? And then the question I always ask is, if I didn't, why or why not? And again, this isn't about judgment. This isn't to beat myself up. It's to understand what happened that was different than what I predicted would happen. The way I always explain this is, a budget is like a roadmap, right? Or it's like directions. It's going to get you from point A to point B, where you are now, to where your goals are down the road. But it's most likely not the only way to get there. There's probably 90 other different ways that you can get there, right? And a lot of the other ways are probably just as good. But you've chosen this path. As I was preparing for my tax prep promo, which I'm in right now for my Done For You tax prep services, I set a goal. I said, I want to make X number of dollars. And then I broke it down and I said, okay, that means that I'm going to get this many people who are going to pay in full. I'm going to get this many people who are going to do the payment plan. And then I'm going to get this many people that only do the 20/20 option. But at the end of the day, if I don't get those exact numbers, I'm not going to beat myself up about it. That was just one route to get me, or route, depending on where you're from, to get me from where I started to my ultimate revenue goal. There were many other ways I could get there. And in fact, I've got my board in front of me where we've been tracking everything. We've got scribbles because, we actually got more of these than we expected. And this one we're not doing as well on, whatever. There are many different ways to get there. And that's what your budget is. So when you're doing this analysis of, did I track with my budget? This isn't about a judgment thing. This is about just understanding what happened that either did or didn't go the way you predicted. And if it didn't go the way you predicted, take some notes on that. Like, what changed? I mean, again, 2020 for a lot of us, right? A lot we didn't predict. So this year especially, I imagine you're going to have a lot of notes on that. But even in a normal year, did you make more from this revenue stream than you expected, or less from this one? Did you end up spending more on Facebook ads because maybe the costs went up? Did you end up hiring somebody that wasn't a plan, at the beginning of the year, but your business grew and so you brought somebody on? Just looking at all those differences, and again, using this information to plan for next year. Looking at where you overspent and why. And again, if it's something like, hey, I brought a VA on because my business exploded and I needed to, great. If it's something like, I got sucked into another, course or whatever, this is me. This is always me. I'm talking about myself here. What can you do? This happened to me actually at the beginning of this year when I did my financial review last year. So end of 2019. I said, wow, I spent a lot of money on learning and coaching this year. And I didn't regret it per se. Because I think it takes some time to find the right people that you want to learn from. But I definitely felt like I spent more in total than I should have and that I wanted to. So going into this year, I sat myself down and I said, listen, these are the people that you want to learn from. These are the people that are meaningful in your life. They're your mentors. You're not allowed to buy anything from anyone else this entire year because these are your people. And not just your people, but these are your priorities. Because I also at the beginning of end of last year, sat down and said, these are my priorities for this year. And so, it was putting my course on Evergreen. It was creating my membership program. Actually, tax prep wasn't even a part of it. That came up later. But those are my goals. And so if somebody had said to me, well, hey, do you buy this podcast program for me? I would have been like, nope, because starting a podcast is not on my radar for this year. So understanding where you've overspent and what controls do you need to put into place to make sure that that doesn't happen again. Going back to this idea of kind of smoothing out your revenue streams, where were your revenues earned consistently throughout the year versus not? I give an example like my tax prep deal, right? Tax prep, I just know is not going to be something that I consistently earn money from throughout the year. That's just not, except for the payment plan. Some people are doing the payment plan option, but I'm not going to be selling my tax prep package in July or August or September. That's just not when people are thinking about, hey, I should work with an accountant. That's an acceptable inconsistent revenue stream. But if you look at something, if you look at your course and you say, I only seem to really sell my course in the fall, then I would be asking, well, why? Is it because kids are back at school and I've got more energy, so I'm marketing it more in the fall? Or what's going on there and how can I work to smooth out that revenue stream? Same question with expenses. Are they generally the same every month or are they all over the place? I can tell you that generally speaking, you want your expenses to be fairly consistent. And if they're all over the place, ask yourself why. Is it because you're doing the squirrel thing and every time you see something cool, you're like, oh, I want to buy that? Then that's something that's good to know. And that's where a budget can really help keep you on track, because if it's not in that budget, then you really have to ask yourself, is it something you should do? Where can you cut back or reduce your expenses? One of my favorite stories of all time is a client who came to me and basically said, my finances are a mess. I don't really know what I'm doing. And I just don't even know what help I need, but I know I need help. And within the first 10 minutes of working together, I had saved her over $300 a month because we went through her credit card statement. And we realized she was spending $300 on tools and software and, whatever. that she had signed up for and just didn't use anymore. But because what she would do every single month was get that credit card bill and like not look at it and just pay and hope it went away, she never looked at the items on her credit card bill to know that she was overspending by $300 every month. So this is why doing something like your financial review is super important, because it's a great time to dig into those details and say, oh, you know what? I don't need this stuff. My husband's been doing this for us in our personal life. He came to me the other day and he said, do you know that we are paying for the same, like, I don't even know the words, but like iCloud photo thing, whatever. We are paying for the same thing 4 times because we're paying for it through this and we're paying for it through this and we get it for over here and we get it over here. Of course, we didn't know that because we hadn't taken the time to sit down and do that review. This is why this review is important. You can save yourself some serious money here. Where can you increase your revenues? This is the big question. I want to see revenue growth month over month, with the small exception of, like, I live by the beach. So in the summer, I tend to work a little bit less in my business because I like to spend more of my summer with my son at the beach. That's okay. I've built that into my plan. But other than that, other than situations like that, I want to see revenue growth month over month. So when I'm looking at this past year, I'm going to be looking at, where did I see that revenue growth month over month? And what did I do that got me there? And how can I replicate that to move that into the next year? Cool? All right, what do we got next? Planning for the new year. I love planning. I love planning. I love planning for the new year. This makes me so happy because I just feel like the new year is a fresh start. And a lot of people talk about how you shouldn't put so much into the new year. Like, it's just a different date. Totally get it. I think everybody's different. But for me, the new year gives me renewed energy. So revenues, where can we increase them? We just talked about that. Expenses, where can we decrease them? We talked about that too. Profits, what should you focus on to maximize your profits? Go back to those revenue streams, go back to the ones that were the most profitable after you factor in your time, and figure out which ones you should focus on. Start with the most profitable revenue streams and put more into those. Put more Facebook ads money into them. Put more of your, social media manager's time focusing on that stuff. Focus on the profit streams that are the most profitable. Cash flow. What can you shift to make it more stable? Can you move some bills later in the month? A lot of credit card and like tools companies, will let you do this. They'll let you change the due date of your bill. Can you do that? Can you maybe you shift the schedule that you pay yourself on so that you've got a little bit more buffer when everything's kind of coming through. Maybe you can change up the schedule where you how you get paid yourself. Can you have clients pay you twice a month instead of once a month? So thinking about that cash flow. And then debt, what can you do to reduce it but during the year? All right, hold on. Where's my little mouse? I love this. Cynthia says, I love the new year. Yes, renewed energy and perspective, right? I'm literally like beaming because I'm so excited. I love the new year. New year makes me so happy. So, all right, y'all, that is all I've got for you today. I wanted to keep this short and sweet, but of course we still took 40 minutes because I love talking about this stuff. I know this was a lot. Here's what I want you to do. I want you to set aside 1 to 2 hours, ideally 2 if you've got it. I know it's like a holiday week, but ideally 1 to 2 hours to sit down and work through these things. And look, don't put so much stress on yourself to like figure out the right answer or like do everything I'm telling you to do. Just focus on observing. Focus on observing what happened and asking that question, why? Why did this happen? What happened here? Why was this different than I expected? What did I do to make this happen the way I wanted it to happen? One of the things I keep saying to my, I'm in a mastermind, and I keep saying to my people is, during my tax prep promo period, say that 5 times fast, during my tax prep promo period, I have been showing up a lot. And I keep going to my mastermind and I say, it's so funny. I'm doing so well during this promo. And I think it's because I'm just showing up so much. And they're all sort of looking at me like, yeah, duh. Some of these things seem obvious, but when you go back and you do your review, you're like, look, I doubled my revenues that month. That was the month that I set that goal to have 50 sales calls or whatever, your thing is, right? It's like putting those things in action. This was wonderful. I'm working on my spreadsheets now. Thank you. Happy New Year. Happy New Year to you too. Going back to this idea of just sort of thinking about what you did to make stuff happen. This is not a business example, but in my state Senate campaign, y'all may know I ran for state Senate this year. It was our last month of the campaign, and we had a really big fundraising goal. In fact, we had never raised this much money in a single month. So I candidly didn't know if we could do it. But I said, look, we don't have a choice. We have to figure this out. So what I did was I said, this is the amount of money we need for the entire month, and this is what it is per day. And it worked out to about $400 per day. So I said, all we need to do is focus. How do we get $400 every day, every day, every day, every day? Do the same thing in your business. I'm telling y'all, by just breaking that goal down and then writing it on the board and tracking it. Anytime we got any money, we tracked it on the board. And we were so excited about it, right? And literally, y'all, we beat that goal for like 20 something days straight. And so that way, when we finally got into the last week, which was the election week where like everybody's it was okay that we weren't hitting the 400 a day. We got really close because we'd already far exceeded our goal. Same thing in your business. So for those things this year that you did really well, where you really did what you wanted to do, how did you make it happen? Write it down, build it into your plan for next year. For the stuff that didn't quite go the way you wanted to go, that's okay. No shame, no judgment. Just think about what can you tweak in your plan for next year to make that happen for you in 2021. Cynthia says, thank you, Meg. Love the realistic and simple tips. I'm so glad. Thank you for that. Because I know when we talk about the money stuff, sometimes it can feel overwhelming. So, all right, y'all, I'm going to leave it there. Let me hold on. Let me pull this off for a second. And hold on. Just a reminder, y'all, because we've got some good stuff going on right now. I am still offering spots for my Done For You tax prep package. This gets you your 2021 tax returns done. It gets you your 2021 quarterly tax calculations. It gets you 4 quarterly check-in calls with me, as well as unlimited support to ask me all of your questions via Voxer through April of 2022, plus my Biz Money bundle, which is the cash flow tracker, the budget template, the profit calculator, and a 1-year membership to Badass Moneymakers, my money-making membership, if you pay in full. But best of all, when you join by 11:59 p.m. Eastern, December 31st, you are going to get 2 tax years prep for the price of 1, because I'm going to throw in your 2020 tax return prep completely for free. So basically, head to megkwheeler.com/tax, sign up by December 31st at 11:59 p.m. Eastern, and you're going to have your taxes taken care of through April 2022. All right, friends, I'm going to leave it there. Oh, wait, hold on. Is this a question? Nope. Okay, good. We're good. I'm going to leave it there. If y'all are watching on the replay and you've got questions, leave them below. I will happily come back and answer them. Otherwise, have a happy new year, and I will see you all in 2021. Bye.